folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update. I am on the road this week, but markets are moving and we wanted to make sure that you guys are aware of what all is going on. Obviously, big sell-off on Thursday of last week, followed by another big sell-off on Friday of last week, S&P 500 moving down about 10%. And then we've seen a little bit of what I'll say is calmness emerging today. S&P 500 right around 5,040 as of my last reading. Although odds are by the time that you see this video, we get it through production and everything else like that, the market will have moved off of that number by a little bit. That puts the S&P 500 down about 14% year to date, and down about 17.7% peak to trough from its most recent high, which means we are still in correction territory. We are not in bear market territory yet. I think that's an important circuit breaker for everybody to understand is that we haven't actually declined all the way down to what we could consider is a bear market. Bear market is when you're down by 20% or more off your most recent peak. We're still in correction territory here, is what we would, label it as a technician. However, I will say that the magnitude of the drop over this short of a time frame is something that we have very rarely experienced before, if ever, to see the market move this far, this fast. Which, by the way, highlights a little bit how exceedingly volatile this market situation is. I'll give you an example. Earlier this morning, headlines over the weekend were pretty awful. Futures looking like they might be down another, 5% today. Those futures sort of cleaned themselves up. And then briefly this morning, we dipped, well below the 5,000 level. And then for a period of about 30 minutes, the S&P 500 shot up 6%. Based on a rumor that the White House might be considering delaying the implementation of tariffs from April 9th for a period of time to give countries time to negotiate. And right at about 10:20, the White House came out and said, nope, we're not doing that. And the market fell right back to where it had been. But I think that highlights a little bit of the danger of this market in terms of thinking about ever trying to time it. Please keep in mind, if you're thinking about how to play this market, that the market can move up very, very quickly in the same way that it can move down. And we want to make sure that we don't expose ourselves to sort of getting that timing wrong. Remember that bad timing works in both directions. If you're out of the market when it goes up, that's just as bad as being in the market when it goes down. With that, I just want to give a little bit of context for what's going on out there in kind of the news, which is, or at least in the the trade market news, which is that strategists are kind of all over the map on what this means. I have seen strategists that are 100% calling for a recession here in the next 2 months and, a lot of wailing and gnashing of teeth. I have also seen strategists that are more in the camp of, hey, you know what, this is just one big negotiation tactic. And all of these countries are going to come quickly and resolve this issue. And so, you better be loading up the truck for the upside. And there's all different views in between. I think the more conservative strategists are kind of taking more of a wait and see attitude, which is, hey, some of these countries may come to the table and negotiate and we'll get some reduction in tariffs in some places. Other countries, notably China, may do more retaliatory measures that won't be helpful with respect to tariffs on those goods. And it's just going to take some time to see all of this play out. And I would put ourselves, a lot of people ask me what I think, I put myself in that middle camp, which is, feels unlikely to be as bad as it currently seems, since there are a number of countries that are sort of coming to the negotiation table to talk about different ways that they can potentially diffuse the situation. However, it also does not seem to be the case that this is just going to go away by the end of the week. It is an exceedingly volatile time in the marketplace. It is a time when we need to make sure that we maintain our playbook in terms of how we invest through these market times. think about tax loss harvesting, think about rebalancing, thinking about modestly adjusting positions, but nothing too crazy, because I do just want to remind people that the market can rip higher just as quickly as it has moved lower. And we want to make sure that we're well positioned for either eventuality. As we have said repeatedly on these market updates, diversification is your friend. Bonds continue to hang in there / rally as that safe asset on the other side of the risky assets. If you look about, globally, there are a lot of different asset classes that are performing well relative to a lot of the stocks that are performing poorly. So once again, a well-diversified portfolio designed to deal with exactly these types of volatile periods. And this type of volatility is actually the best time to let your portfolio do what it's intended to do. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.